Good afternoon. Thanks for joining us on this presentation of Mako Mining. A few of you may be new to the story, so I'm going to advise you to check out some of the previous webinars on the Adelaide Capital YouTube channel, as this is really just going to be an overview of recent results and exploration and recent news items. With me, I have Akiba Leisman, CEO. He'll walk us through some of the updates. And as always, this presentation will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's presentation on their website, which has been updated for today. And there will be a Q&A session throughout, so feel free to input your Q&A, or you can email them to me at deborah@adcap.ca. With that out of the way, I'd like to introduce Akiba, CEO of Mako Mining. Hi, Akiba.
Hey, how's it going, Deb?
Good, how are you?
Excellent.
So you've had quite a few news items in a variety of different categories. So maybe you can walk us through what's going on with the mine, with exploration, with the recent corporate news as well.
Sure, absolutely. So just as an overview for Mako, first of all, my name is Akiba. I'm the CEO of the company. We're always doing three things in northern Nicaragua. We've now commercialized what is the highest grade open pit mine in the world, rated capacity of 500 tons per day. We're nearly there. In the last quarter, we were operating at about 85% availability at 429 tons a day. We fully anticipate to be at nameplate capacity sometime this quarter. In fact, 7 of the last 9 days from the production center that you see on the left, we're over 500 tons per day on net. So we're really nearly there. Secondly, we are attempting to expand production to 1,000 tons a day by the very end of next year, 2022. And that's going to be coming from a couple of mining fronts. One is a second pit that you see in this picture over on the other side of the tailings facility, our central pit that houses a separate vein called the Aras vein, which we actually started to mine, or at least pre-strip, over the course of the last few days, and we'll be in ore sometime over the course of the next month over there. And then the big one, which is Las Conchitas, a couple of kilometers to the south of what you see in this picture. And the idea there is to get a maiden resource over Las Conchitas. Currently, there doesn't exist any resource over Las Conchitas. To have a maiden resource sometime by the very end of the first half of next year, that will encapsulate everything that we've done from our info work over at San Albino and Las Conchitas, and then to be mining Las Conchitas and San Albino simultaneously by the very end of next year at 1,000 tons a day. Again, the production center that you see on the left, which is rated for 500 tons per day, we actually have a second mill in place that will allow us to double production. We call the one on the right Bertha, the one on the left Betty. We're actually going to start turning Betty on sometime over the course of the next 3 weeks. So we'll have both mills available really from this year, and then the intent is to really double production by the very end of next year. And then lastly, and what I do believe is the most important part of Mako, is that we do think that we're sitting on an orogenic gold mining camp over here. We've put out quite a bit of not just drilling results in the near mine area, but exploration results, prospecting results from as far away from the mine as 21 kilometers from where you see in this picture right now. And we are finding very, very similar material, very, very similar grades, very, very similar morphologies to what we have over at San Albino. We do think that we have the potential to turn this into a mining camp. We have about 23 kilometers of what is now tested strike on our property. And really the potential of what we have here, I've never been more optimistic than I am right now. Now, a little bit about where we are as a company. One of the other news releases and news items that I did release over the course of the last couple of days was the announcement of a capital return policy. So let me just frame where we are from a balance sheet perspective, what the profitability of the mine is, and what we intend to do as stewards of our shareholders' capital. So we declared commercial production on July 1st, so the very first day of Q3 of this year. So we have not actually filed any financial reports on a commercial production accounting perspective. That will happen in November when we file our quarter end September. Now, what you're going to see in that quarter end, even though the mine was only running at about 75 or 80% of its rated capacity, even at that level, this was a very, very cash generative mine. We're going to have a positive change in working capital in excess of $10 million for the quarter. Our payables have been paid down to the minimum level that it needs to be. And then right now, everything that's coming out of the mine is not only going to be funding obviously our operational costs that's running about $2 million a month, our exploration costs that will be added to that, our corporate overhead, but even beyond that, there's going to be a lot of free cash flow generation associated with this. And we currently have $12.8 million of debt to the controlling shareholder, Wexford Capital. I announced an adjustment of the maturity date at no cost for that loan to put the maturity date back to the beginning of 2023. That will give us room that if our shares were trading at levels that it was trading at a couple of weeks ago, that we would have the capacity to repurchase stock as a form of a capital returns program. Additionally, the other $8 million of debt that you see on this balance sheet was restructured from a third-party provider, a group called Nabari, into a finite gold loan, 24-month tenor, 205 ounces a month, to an affiliated entity called Sailfish Royalty Corp. That is now a self-liquidating facility. So after 24 months of 205 ounces of gold being given to Sailfish, that facility will go by the wayside. So what we are going to be left with is $12.8 million of debt that we need to pay back by 2023. With our current cash flow, we can do that sometime in early next year. But if our stock was trading at levels that it was trading at a couple of weeks ago, we now have the capacity to repurchase nearly 33 million shares of stock in the open market. So the intent really is to try and repay as much of that debt as quickly as possible. But if we will be opportunistic prior to that happening with our share purchase. But after that debt is repaid, our intent is to repurchase all 33 million shares. When we announce a buyback, it really is our intent to do it. Now, just for everybody's benefit, I'll give you a little bit of an overview of where we are in the exploration program, because this really is the key to the company going forward. Right now, it is concentrating on near mine exploration. We have 3 rigs on site. We have another 2 rigs that are contracted en route to site. We've been delayed in getting those rigs for the same logistical reasons that every corporate around the world in any industry is experiencing right now. It's very difficult to get containers and having those ships delivered to Central America. But our intent is to have those 5 rigs fully operational sometime in the middle of next month, November. Now, currently, the 3 rigs that we have, one of them is focused on Las Conchitas, really testing the margins of the deposits that we know about right now. When those other 2 rigs come to site, we're going to start looking for new areas in and around Las Conchitas. The other 2 rigs that are currently there, we're focused at 2 zones over at San Albino. One is the direct continuation of the San Albino deposit to the northeast. And we're seeing a huge amount of potential, even from a near mine expansion over at San Albino. There's very low hanging fruit that will be able to expand the resource, what we know about right now, what we're permitted to mine right now, and the ability to actually add years of production to our current deposit. Likewise, we have a rig that is focused on the southwest of the San Albino deposit in an area that we are also permitted to mine right now. When we delineated our resource at the end of 2020, the southwest zone was a very, very complicated ore body to put together. So it was very difficult to string together these disparate holes such that we only put 450 ounces of resource in the southwest pit, just because it was very difficult to connect the dots over there. Now, we have a rig that was following up on some of those drill holes, and lo and behold, we're finding the zone. I can guarantee you that the resource of the southwest zone is going to be more than 450 ounces when all is said and done. But it does show that the ability to expand even San Albino is going to be expanded to the northeast and southwest along strike. This is not just a 270,000 ounce resource that we delineated in 2020 by the mine. It's not just Las Conchitas, which we anticipate being roughly 3 times the size over as San Albino. It is also the regional potential that we have over here. So we picked up 2 concessions over the course of the last couple of years or so. The green one was purchased from another publicly traded company at the end of 2019, an area called Puerto Rios. That is the direct strike extent to what we have over at San Albino. And then the pink or magenta concession, La Segoviana, that is looking extremely interesting to us for a whole host of reasons. There are sporadic artisanal miners on site, so they have exposed the veins in various different locations. We have been invited to go down to their underground workings, which are going down anywhere from 5 to 10 meters from surface to very shallow deposits. And you can see the strike potential on these things when you start stringing together some of these artisanal workings that have been put together with very, very similar grades to what we have over at San Albino, even without putting a drill hole over in La Segoviana. So everything that we've done has really been channel sampling of exposed veins from these artisanal workings. Even without a drill hole, we could say that this is going to be a discovery when we start drilling in this area right now. So in order for us to drill those two new concessions, the green one, Puerto Rios, we had our public consultation on that 3 weeks ago. It was unanimous consent amongst the local community to grant drilling permits over on the green. We anticipate getting permits to drill over there some imminently. It can happen any day now. And then on the magenta one, our public consultation is set for the end of next week. Hopefully that will go well. And ideally, we would get permits to drill over at La Segoviana this calendar year. But if not, our expectations is that very early in the new year, after the elections, we'll be able to get permits to drill over there. And if that's the case, this is going to be opening up forget about like another satellite for us to drill. This will be a completely separate drilling, almost platform, an exploration district for us. We will actually have to have dedicated rigs, dedicated teams over there, because in and of itself, La Segoviana and some of the northeast extensions where we have really does have the potential to go and chase literally hundreds of targets on our property with grades very similar to what we have over at San Albino. So our objective from the start in 2019 is to get this mine up and running. We're able to do that. Declared commercial production July 1st. It's an extremely profitable operation, even at that 500 ton per day scope that it's designed to do right now. But the objective is to get this up to scale at 1,000 tons a day by the very end of next year. But really, the main objective is what you see on the screen right over here, the ability to really prove that this is a district, and everything that we're seeing on the exploration front is confirming that.
When you're talking about your in-pit exploration or extension to the pit, are you drilling at depth too? I believe the original PEA had an underground component. Is that something that you're still considering, or are you really looking to expand along strike?
We have to prioritize. So there has not been a drill hole that has gone deeper from breathing air than 120 meters from surface since 2019. So we do have a few sporadic deep holes that have shown the strike extension, especially of the Aris vein, that vein that we're opening up in the central pit now this week, that have proven strike continuity, dip continuity on that Aris vein by at least 800 or 900 meters. There's been very, very few holes that have been drilled at depth. So in terms of where we are from a priority perspective, it is get that San Albino resource done. That was 2009, 2020. Have whatever we had from a data perspective over at Aris in the central pit. Secondly, get Aris drilled, because it was a more complicated vein than San Albino, to a level that we can actually build a real mine plan around. That's been the objective for the last, let's call it year or so. So we've now finished off the Aris drilling, and we can say that the resource over at Aris is going to be materially expanded from where it was before. And then have near surface deposits that we can discover and move into a resource estimation over at Las Conchitas, which we've already done. And then the next priority is some of this low-hanging fruit that we have for some of our satellite concessions over at Puerto Rios, Segoviana, even to the northeast of what we have over at in our San Albino Murra concession, to the northeast of Puerto Rios, and then find stuff that we have to the south, historical producer over at El Golfo in the El Jicro district. And at some point, the underground is going to come into play. So you have to prioritize in terms of what exactly is going to be that level of effort that you need to bring in additional mineable resource. All of these are worthy of drilling, and really our capacity to follow up on these targets are not really limited by exploration ideas. It's not even limited by capital for anymore. Probably last year to a certain extent it was. But now that the mine is cash flowing, we're not limited by capital. It really is limited by access, permitting. We need to get that green and pink concession permitted. Certainly permitting was one, but it's really logistics, human logistics, actual mine site logistics. It takes a lot of support, staff, fixed infrastructure to even run a 5-rig program. If this gets extended to a 10-rig, which I actually think is going to be the natural rate of where this is going to be, let's say towards the end of next year, you're really going to have to invest in a lot of that work by hiring geologists and people and support staff, and then actually building systems in place where you can process that amount of data. We're not there yet. So all of these things need to be targeted and drilled over time. But the first step was getting this mine up and running. And as soon as we were able to get that into commercial production and have this mine just spinning off cash, even though it's still not running at full nameplate in terms of what we have right now, it eliminated all of the external risks of being able to finance this thing. We don't have to worry about the markets anymore. We have every bit of capital that we need to do all of our 3 objectives. And now that we're there, and I want to remind people, we only declared commercial production on July 1st. We haven't even reported a full quarter of commercial production yet. But now that we're there, handcuffs are off. We have the ability to go and start systematically exploring what this deposit is about. And we have every indication that this is going to be a mining district when all is said and done.
Okay, I had one other question just about your exploration in and around San Albino. I believe San Albino is, the resource consists of 5 separate veins. Is that correct? There are 5 veins in the system? The defined
maybe
San Albino.
So there's, let's call it 2, which you can have a functional geological model around, which is the San Albino and the Aras vein. There's one that we actually did estimate a small amount of resource called Naranjo. There's a small open pit developed over there, but even that needs some additional drilling for us to be really comfortable with its model. And then there's one, you can call it a vein. I'm not actually sure if it's a vein or a splay of the main San Albino area that we call El Hobo. We were not able to make heads or tails of that with our geological modeling. So we were there to kind of run that as kind of additive to stuff that we were taking out along with San Albino. And then there's another vein that we call RS2, which there just isn't enough drilling for us to have a really firm estimate as to how much, if any, gold is located over there, which would be the deepest of the 5 veins. So you're right. There are definitely 5 veins. Whether or not you'd actually develop a geological model on all 5 of them is still a question mark.
And as you may know, I don't have great eyesight and I'm not wearing my glasses. Can you tell us which vein it is that you're chasing into Puerto Rios?
It would be the San Albino. So this is going on, call it a modified long section over there, but really the strike of the vein, which will kind of get moved around in 3D because of topography, but generally the strike of the vein is going to be going in the direction of the text that you see on the screen, from the southwest to the northeast. So what we have over at the direct near mine exploration, so just on the northeast side of that blob, there's still another 500 or 600 meters until we get to the river. We're going to have a little bit of a buffer zone before we get to the Rio Jicaro from a permitting perspective. Even then, this is not even just speculative. Like I was just going through the data on some of the stuff that was left off on the resource. The resource, we gave the geological model that we designed internally to Mine Development Associates in, I think it was November or December of 2019. Or I guess, so we were able to finish an internal one. We gave that to MDA sometime in early 2020 for them to do the resource estimate over there. At that point in time, we didn't own Puerto Rios, right? So we acquired that in December of 2019. So the time that we had our model, we were operating on the assumption that we needed to develop a mine plan only on the basis of the data that was contained in that inner square over there. And then we're going back some of the data that we have over here in terms of like drill holes that were onto the northeast of the resource, because it basically looked like the data might have been offset by fault over there, and that was kind of like the operating assumption. But you go through the data, we've hit. They're actual drill holes that show half ounce plus material on the northeast of our resource, and it was just not included in that estimate simply because we did not own Puerto Rios at the time that geological model was done and dusted. It is completely open along strike all the way to the river, which has the ability to actually expand the potential of the strike of the San Albino deposit. Forget about the stuff on the other side of the river, which is going to be another exploration program. Just the pit itself by a factor of 2 or 2.5 to what we have right now. So the fact that we actually have that ground over Puerto Rios not only is opening up this the 3.5 kilometers of strike directly on the concession, and then it kind of closes off the puzzle piece to what we have on the San Albino Murra side by now proving that we have about 9 kilometers plus of strike potential to the Murra River, which goes north-south, like you see on the screen. But just San Albino on the southwest side of Rio Hicaro, we have the ability to expand this by at least a few years of production over here. It's pretty extraordinary what the potential of this mine is. And you don't need to have a lot of strike. You don't need to have a lot of dip to actually start adding real production centers for a deposit like this. The entirety of the West Pit that we're mining over here, this West Pit that you see over here, that we had 8,200 ounces of production in startup mode. We'll probably have over 10,000 ounces of production this quarter, generating a huge amount of cash, was only delineated on 230 meters of strike. We have the ability to expand the strike potential just of where the San Albino vein is on that West Pit by at least a factor of 2 until we get to the buffer zone in the river. And then the other side of Puerto Rios, then it's a completely different ball game. You do have the ability to extend that for literally miles.
Appreciate that. I just had somebody from the audience say that their audio has gone, and I just want to confirm that that's not for everyone. Can someone just write me back that they can still hear us? And I did have an audience question that's somewhat related, Akiba. You've always been forthright that the gold in San Albino has been lumpy. How do you overcome the hesitancy of many institutional investors not to invest in a company that does not have a defined, proved reserve of precious metals?
It's a good question. Look, there's a lot of. Let's just take a step back. The junior mining industry is a very specialized one, right? So you can't. It's not fair to ask generalists to make a call on geology when nobody's expectation should be that they kind of know what's there on the ground. So in doing that, you really do have to take if you actually want to invest in gold stocks as a generalist, for instance, you do have to take, for lack of a better word, shortcuts. So simple heuristics in the market. And some of those are, all right, what exactly is the delineated resource of this particular company? Are we investing in management teams that we like and respect and so forth? I get it, right? So I think it's perfectly rational and fair for an institutional investor to say, I need to have a mine that has 1 million ounces of bankable reserves. It needs to be producing 100,000 ounces a year for me to invest in you. There's a lot of complexity in the world. There's a lot of different places to put your capital. Having shortcuts and heuristics like that is probably a valuable tool to kind of like focus your idea of where the capital is going. One of the advantages, though, of having somebody like Wexford over there is that while I would love to have a broader shareholder base, at the end of the day, I don't need one. This company was able to have all the capital it needed to do to build a mine, to finance its objectives, has all the capital it needs to do to finance its 3 main programs over here, 1, 2, and 3. And if we don't have other institutions, we don't have sell side coverage, if we don't have all these things, you know what? That's fine. I've spent the last 2 years accumulating and buying the stock personally, in excess of 10 million shares really since 2019. We're now have announced a 33 million share buyback associated with this. I think over time, though, is that Mako is a public company and it needs to grow into itself. It needs to grow into itself from the operations. So we do need to be able to expand this to something where one of those institutions that I was talking about before could actually look at a list and say, you know what, Mako is interesting to me. Mako needs to expand to the point where it needs to check all the boxes for it to have index inclusion. So for generalist investors who actually want to make an investment in the junior gold mining space, so they can go invest in the GDXJ, which Mako would be in X% of that index. That's something that we want to do over time. But in order to develop our three strategies over here, frankly, I didn't actually need anybody's help other than to have very, very supportive shareholders over here and to have the operating team that was able to execute on our plan in a very tough environment.
You touched on a couple of the pushbacks. Another one that I often get when I'm talking to people about the story is the share structure. And I know the share buyback will help that in a marginal way. At one point, you were talking about doing a consolidation. Is that something that's still on the radar for the company?
Sure. In conjunction, and it's always been the case, in conjunction with us uplisting to a larger exchange. It's the impetus behind that is really to incrementally enhance the liquidity of the stock. So, and this is coming from feedback from various brokers and institutions that we had, is that it's not just the optics of this. In order for us to provide custodial support, even the ability to have your shares marginable, which is actually a big deal, not to buy Mako shares on margin, but to actually be part of a portfolio that is marginable. It's actually a big deal when you're talking to large scale retail accounts for these shares not to kind of consume a lot of the capital within the portfolio. If these are marginal shares, it's going to enhance the audience and the overall liquidity profile for Mako, such that it can eventually have index inclusion, such that it can make M&A easier over time. So we're always going to look to do the uplisting. I think the initial feedback that we got at the end of last year was that we needed to have two quarters of commercial production under our belt for us to do the uplisting without creating a lot of hassles, especially over the TSX. So that will happen when we announce our audited financials for year ends this year, and that will be out sometime in April. And I don't see any reason why we wouldn't apply for an uplisting and commensurate share consolidation along with that once those financials are out for year end, so April of next year.
I think that makes a lot of sense. Staying on the theme of financials, I had a couple questions and inbounds after you put out your production numbers, just asking about cash costs. When will investors be able to see what kind of cash costs you had in the quarter? I'm assuming you're going to put out with the full quarterly release.
Yeah, so people may have actually noticed a little bit of a difference in reporting on how we were doing our operating updates. So we were actually providing monthly operating updates. Starting, I think, at the for end of June month, and then from a couple months ago, we were kind of giving like a little bit of a snapshot for our mine site operating costs, as well as attributable overhead costs from our executives outside of Nicaragua who are directly related to the mine. Like our COO, we allocated costs associated to those numbers. So we put those out for 2 months in a row, and then we actually removed them for this last operating update for a very specific reason, and that's because when we actually file our Q3 financials, we need to have everything reconciled. So everybody should be waiting with bated breath that when we put out our Q3 financials, our first quarter of commercial production, that we're going to announce our cash costs, our what we're going to call our total cash costs, and then our all-in sustaining costs associated with this. There's going to be some on the AISC. There's going to be some one-time events where we're starting to get a better handle on reclamation liability specific to Nicaragua, so it might be a little bit elevated. But from a cash cost perspective, we actually put out some some results already on that. And our mine site cash costs were running just around $2 million per month. And we were averaging somewhere in the neighborhood of 2,700 ounces of production. So I think we also reported our average realized sales price for the gold was in the high 1780s range. So if you take 2 million divided by the revenue that those ounces generated, you're going to get low cash cost numbers. And then, like I tell people, the punchline is the mine was actually doing great. The plant was still in kind of startup mode. So I gave the operations maybe a B minus. So even though our cash costs are going to be, let's call it around 700 flat, maybe slightly lower than that, that's not actually where the stabilized costs of this operation are. We're actually able to get to 500 tons per day this quarter. It's going to be substantially lower than that.
So how do you go from a B minus to an A or an A plus?
I think part of it was actually telling the guys that I graded them a B minus. As soon as I did that, they, lo and behold, we got 7 of the last 9 days running at 500 tons per day. But having said that, we started this mine up with a limited amount of capital, right? So we raised our last equity in, I think we closed that July of last year. Took in US $20 million of equity, and then we got hit by 2 major hurricanes. So we took a $6.4 million third-party loan, which has since been refinanced back in February of this year. And then we actually had some pretty significant startup delays in April and early May, where we actually did not have a path to selling gold for a period of 5 weeks. So it was a little bit of a crisis situation over there that needed to be resolved. And then really since May 12th, the high grade is getting put through the mill. And really from that point in time, this company has been cash flow positive. And obviously from a positive earnings perspective since we declared commercial production in July. That being said, we've experienced kind of a once, I would say, certainly once in a generation, probably even more than that, crunch to the global logistics supply chain. The ability to get spare parts, the ability to have vendors on site to kind of work through some of these operational challenges has been difficult. We still have we've had various key important components of our plant that were sourced out of places as far away as South Africa and Australia, where we have not had primary reps over at site. Under normal circumstances, the main guys would be there to go through some of these teething issues. We've had regional representatives come from various parts of South and Central America to help it. It's not the same thing, right? So a lot of that was us taking on some of these troubleshooting, debottlenecking, and just basic maintenance items. And then we really spent over the course of the last 3 months really buffering our balance sheet with spare parts. Before, part of the issue of getting to 500 tons per day is that what 500 tons per day really means is not running this at 500 tons per day. It means you're running this at something higher than 500 tons per day and then having a pretty high level of availability, right? So let's say for argument's sake, 500 tons per day really means 525 tons per day at 95% availability. That would be kind of like the ideal situation. Multiply those two numbers together, you get roughly 500 tons per day from that. We've been running this at 429 at 85%. That 85% number is directly related to us debottlenecking these things because of labor shortages, because of part shortages. All of them had to be systematically rectified over the course of the last couple months. I'll give you one example. So, and actually one of the reasons I've never been actually more optimistic that we're going to get to nameplate capacity imminently is kind of where the bottleneck is located. People think that the word bottleneck is somehow a bad word, but every operation has a bottleneck. But the bottleneck needs to be in the place of the plant that you design the bottleneck to be. And for us, that bottleneck should always have been our filter press. It's kind of like a little bit of a bad picture over here, but that big piece of equipment in the front of that plant over there, that should be the bottleneck. And the reason why that should be the bottleneck is because that was designed with the ability to incrementally expand it by adding more plates, having some more cloths associated with to it. And what we experienced for our plant is that the bottleneck was at various different parts of the operation. It was at our gravity circuit for a while. It was at our elution circuit for a while. It's really only in the last couple of weeks where we actually had the ability to get that bottleneck to the filter press. So now once that happens, like, great, all right, we got the bottleneck over there. And then now how do you actually get your bottleneck to expand capacity so you can actually get to that 525 by 95% availability? A lot of that is adding additional plates. Normally, you would get those plates delivered on a cargo ship from Singapore is where they're coming from. You can't get any cargo ship from there right now without like a year delay to the process. So over the course of the last week, like scrambling, trying to get these things on air freight. But those are the things that you kind of have to work through in the environment that we're in. But it is a very encouraging sign that some of those incremental debottlenecking issues have now been pushed to the press. We'll deal with kind of like the general state of the global logistics supply crunch. But as we actually start debottlenecking it and kind of expanding capacity for where our bottlenecks should be located, I have every confidence that imminently we're going to be at 500 tons per day capacity.
Okay. One of the other issues that you dealt with last year when you were completing construction was the weather in the region. I think there was 2 Category 4 hurricanes that made landfall in Nicaragua within a month timeframe. We're headed in, or I think we're already into hurricane season again in the region. Have you seen any hurricanes so far? What's it look like for weather issues this year?
I'm gonna regret saying this. I know I am, but the weather's actually been fine this year. But I know I'm gonna regret having actually mentioned that.
Well, I think wet season ends in November, right? So you're halfway through.
Wet season, right? Well, rainy season. There's 2 rainy seasons. I guess there's 1 rainy season, but the beginning and end are kind of the most severe. So May and October are the worst months. The irony of last year is that both hurricanes came in November after the rainy season should have ended. They actually ran out of Greek letters when the hurricanes came. We got hit by Hurricane Greek letter Eta and Hurricane Greek letter Iota. Fortunately for us, we've actually had a pretty benign season so far.
All right. I made you predict the weather, so I'm not going to make you predict the price of gold. I do have some other questions that are a little bit all over the place. I would also encourage people to input any questions they have. I have the privilege of asking Akiba questions all the time, so mine might not be as relevant to some of these investors as I think they are. I have had a couple questions about Nicaragua, so maybe we can talk about stability in the region. Here's one question specifically. The government of Nicaragua has cracked down on dissent recently. Do you worry that once you've completed Mako's planned expansion in production capacity, the government may impose very high additional royalties on the properties or expropriate the properties outright? I mean, we've seen royalty regimes changing in the region. Is that a risk to you?
There's a bunch of parts to that question. I think anywhere around the world, governments' balance sheets have been stretched. I think it's been somewhat a little bit alleviated this year versus last, but last year specifically. So people will look for ways of raising revenue. I don't think it's unique to Nicaragua, but it's a risk for any investor in the mining industry. I don't care what country you're in, but United States and Canada inclusive. So yeah, there was a fairly comprehensive mining related tax reform in Nicaragua. I think it was 2017, it may have been 2016, but I think it was 2017, which really was not there to change the headline rates. So 30% corporate tax rate and 3% royalty, but it was really there to tighten up the payability of that. So we're actually happy when we pay taxes, not not even just because it demonstrates that the mine's profitable, but I do think that we have stakeholders inclusive of the government of Nicaragua. So we're effectively partners in that regard. With the respect to expropriation, the end of the day, we have concessions from the government. So the gold in the ground belongs to the people of Nicaragua. We have a concession to mine there for 25 years that has the ability to extend that an additional 25 years. But at the end of the day, this gold does belong to the people of Nicaragua. That being said, it's somewhat counterproductive to have policies like that, and I do think that the government across the board recognizes that. So really, since I've personally been involved in the country since 2014, and as executive since 2019, they've really been helpful, right? Just encouraging the expansion of and the environmentally sensible exploitation of their resources, which as the fourth now commercial mine in the country, we've been part of that objective.
Thanks. Sorry, somebody just started a leaf blower right next to me. So if there's any issues hearing me, that's why. Going back again to Nicaragua, because I'd like to stay on the theme, just in terms of permitting for drilling and for the mine, maybe you can walk through the steps. You alluded to having some community consultation. Can you kind of walk us through how you get an exploration permit and then how you take it to getting a permit for extraction? Because I believe you were granted a permit for extraction with just a PEA, which is, in my opinion, not that usual. Maybe it is for the region, but not internationally. So do you mind walking through a bit of that?
Sure. So there's a different process in place to have what are effectively exploration and drilling permits, and then the actual mining and the exploitation side, which we have in around San Albino. The reason why the Puerto Rios concession took so long to kind of work through the process is that very early on in the acquisition of Puerto Rios, it became clear that whatever permits that Condor was granted, I think it was in 2000 and maybe 6 or 7, they had them granted. It was not going to transfer over to the new owner. So we kind of knew from the start that we were going to need to apply for the permits. But then we actually couldn't actually start the permitting process on that until the concession was officially transferred over to us in the registrar. That took about a year to get done. So really, even though we acquired that concession from a commercial perspective in December of 2019, we didn't actually own it as far as the government registry is concerned until the end of last year. So with that time, we needed to do our baseline work. And then once that was complete, we made sure we took a census for any small scale miners that are on site to see what the community impacts would be. We gave our initial report to the government. Then they had us do a consultation. We had our meeting. Everybody in the affected villages were there. They all were kept abreast. We had no objections to what we were doing, and now it's in the government's hands to grant us a permit. I don't think that's an unusual time frame. La Segoviana, we had granted that to us in February of 2020. So last year. Took us a while to actually get on site to do some scoping work to find out what we actually wanted to do from a scope of work. So that was always going to be running kind of in parallel, maybe slightly behind what we were doing over at Puerto Rios. But if it wasn't for the elections coming up in a few weeks and a likely changeover of the at the ministerial level, Puerto Rios and Segoviana probably should have been granted at the same time. I think there's a high probability that Segoviana will get pushed back until the new ministers are selected. But But I don't think having a year of permitting from a drilling perspective is unusual for Nicaragua or even in this part of the world. From the exploitation side, we actually need to have kind of some semblance of a resource and a mine plan and kind of where we're locating our facilities or our dumps and things like that. So it's going to take some time for Las Conchitas for us to get that into play. So we'll likely do that in the first half of next year. We'll have at least an initial indication as to what the footprint of that mine and those pits will look like. And then we'll submit that to the government probably early in the second half of next year. And then, given the fact that this is pretty close to where we are over at San Albino, it will likely be treated as an addendum to our mining permit, and we can go from there. So hopefully we'll be able to get permits on that by the end of next year, in which case we can immediately start mining.
There have been a number of extraction permits granted, not just to yourself, but also to Condor in the last few years. So I think that bodes well. And actually, you had that slide up, just sort of the macro Nicaragua slide earlier. And when I first built that slide, or when we first built it a few years ago, gold was the fastest growing export. And now it's the largest and fastest growing export, which has changed over the last few years, which I think is notable. I had a question. I actually had one more question on Nicaragua, which is about employment in the region. What percentage of your employees are Nicaraguan or locals?
So we have across all of Mako, we're running with contractors about 430. Within Nicaragua, it's maybe like 408, and then. So that's kind of like the percentage. And then everybody outside of Nicaragua is Mexican, American. I think we might even have a couple Canadians that we hide in the closet here and there.
I guess I'm one of those closet Canadians. You were talking about Las Conchitas just a few minutes ago and how you're advancing it towards a maiden resource with the intention of eventually mining there. One of the audience questions, Akiba, I recall you stating linking Dolores, Mango, to Bayakun. That you stating linking those regions will be a game changer. Is that still the plan? And when? Near term, before, after Puerto Rios, before, after La Segoviana? You kind of covered your objectives when we were talking about underground earlier, but maybe you can revisit those in terms of your nearer term plan for production.
Yeah, it's kind of interesting how analogous Las Conchitas is to San Albino. You kind of have like this, it's very, very, very continuous, quite, let's say, relatively easy vein to model. So in the San Albino side, that would be the San Albino vein. I think there's even some complexities with San Albino, but I think anybody that takes a look at the geological model, the geostatistical model associated with it is like, I got the vein, see where the grade distribution is, makes a lot of sense. And then you have like the surrounding veins, which are actually very, very high grade associated with it, but it is difficult to kind of get a really good handle of the model. And sometimes that it's because of the nature of the ore body. We have these kind of shear zones that kind of pull the vein and they pinch and swell, boudinage every now and then. You see that in some of the other veins associated with San Albino. So Aris is like that, where if anything, the grade of Aris is higher than San Albino, and then you can get into these zones which are extraordinary, where you have like the swelling part of the vein, and then all of a sudden you have these little pinches where it's actually very difficult to see where the ore body went. So when we actually did the resource in 2020, I think we only modeled about 14 or 15,000 ounces of open pit resource over at Aris. And that wasn't because the data was cut off. It was just because it's like, it's the drill hole. It should be matching like over here. And all of a sudden it's not there anymore. So part of the objective of this drill program was kind of like linking a lot of that, those holes in where in our model, where we took the approach on the resource that if there was any uncertainty, it was given a 0. So anything that we're doing right now is additive. I think it's very, very analogous to what we have over at Las Conchitas, where you actually have a very continuous vein called Bayakun, generally wider, generally higher grade. pretty easy to model over there. And then you have this other vein, like some of the highest grade I think we've ever actually drilled over Las Conchitas, thinking that that bottom right bullet point, 376 grams over meter, was actually not on Biocon, that was on Mango. And then you have these extraordinary veins, and then 10 meters down the road, it's like you gotta link these things together, and it requires a lot of drilling to get done. On the east of Biocon, so Dolores, it's kind of one of those things where we're in the zone, get these 20 plus gram hits, 3 or 4 meters wide, but it can be faulted in 3 different directions. And it's not even just finding an offset on the shear. It could be there, and a high angle fault drops it down. So there's a lot of these blocks that are very, very difficult to put together with a single rig. I think it's going to be a very, very analogous situation to what we have over at San Albino, where we designed the big bulk of the open pit resource around something that we can model, get it up and running, and then we'll kind of have to go back and then do some infills for some of those less well behaved veins and structures. It's there, but there are some localized complexities with our faulting and just the general nature of the shear zones of the ore body. It's like it moves things around, and so it's kind of it's the nature of the beast. Is God blessed us with over half-ounce material diluted in these veins, but to play a little bit of joke on us, it didn't make it so easy to get it out.
Well, there's been a few things that haven't made it so easy for you, Akiba. I've got one last question from the audience, and it's about Sailfish. We did a webinar yesterday for Sailfish Royalty with the CEO, Cesar Gonzalez. So anyone that's interested in that story, please feel free to check it out. And I believe this person also participated in that webinar, and they're asking the same question they asked yesterday, actually. You are also a chairman of Sailfish Royalty. With so many royalty stocks trading down on the year, do you see any potential for Sailfish taking over small precious metals royalty companies that are currently selling below NAV? Currently trading.
Yeah, actually just watched Caesar's presentation before this, so I didn't attend it yesterday, but I saw it today.
You're allowed to have a different view.
No, actually, I thought he is spot on. Is that and I think this is something where and I don't fault any of the investors on the line for this, because I fell victim to it when I was an investor full time. Is that what you see on the screen is not necessarily indicative of M&A that can necessarily happen. I think the biggest friction in getting M&A done is personalities. It's the social aspects of transactions. And the interesting thing from actually on either side, on Mako, is the same way. It's like, for us, we come out at everything from an investor's angle. If it made sense for me to step down as management, like it did when I was the interim CEO over Marlin, that was the key to getting Marlin golden ring. I had zero issues doing that, because I am trained not to actually care about the social aspects of the transaction. And especially for royalty companies, because it's not like you need to import these like highly skilled mine operators who need to go dig a big hole in Nicaragua or whatever country you're going to be mining the gold from. These are royalty companies. It's basically a cash checking exercise. But you're surprised. You should be surprised about how many management teams are resistant to doing M&A, even if we would be completely willing, saying, all right, you're a royalty company, let's get together. We're perfectly okay stepping back as management. But, and here's the big but, if we're going to be merging, you're not going to be running the royalty company that way. You're going to be running the royalty company from an investor's angle. That means capital returns. It means you have to pay a dividend. It means you can't have any excess capital on the balance sheet, because that is taking away from the valuation of your company. And very few people actually want to do that. So it's not a question about maintaining jobs. It's not a question about salaries. It's not a question about, it's a question about, do I want to actually cede control to somebody who's going to have decision processes on how this company is going to be managed, knowing that they're coming at it from an angle of an investor. And I kind of want to maintain my social status as being management of this small scale royalty company. If it was just a question about me selecting a stock on the screen, saying these two things should get together at this premium, and therefore it's going to be trading higher, that's the easy part. And I could come up with a list of things that are sensible about that. Unfortunately, we have to deal with people.
I don't think we should leave it there, Akiba. Unfortunately, we have to deal with people. That might be my favorite thing you've said in a while. I had one more question, which is just about input costs. Like, we've seen energy prices rise a lot over the last little while. I'm assuming this is going to impact you. Can you speak to that? Will this impact you disproportionately or less disproportionately, being in Nicaragua, being a high-grade open pit mine? Can you talk to a little bit about that dynamic? Because I think over the next quarter or two, we are going to see some of the producers come out with some pretty bad earnings based on the energy prices.
Yeah. So the plant that you see on the right is run from diesel gensets. And then you really have to squint. So all the way in the back over there is our elution circuit and refinery, which requires a lot of propane to run, to get the heat requirements to strip the gold from the carbon and then eventually to smelt it. So prior to oil going a little bit crazy in the last month, of our, let's call it, we were averaging about $1.9 million mine site costs. It was probably about 325,000 of that was energy related. The vast majority on the diesel side. So think about like $300,000 on the diesel side, 50-50 to have running our contractors mining fleet, and then and various parts of the plant, and then the other 50 the actual power generation going into those gensets. So the stuff that we were burning for energy. So if oil prices across the board go up 10%, that's going to be adding probably $32,000 a month to our costs, which is actually a relatively significant amount of percentage of our mine site costs, but relative to the profitability of our ounces, it's actually not that big of a deal. So we'll have an impact in that kind of percentage.
Okay. And then M&A, we haven't talked on any M&A. Do you have an M&A strategy in place? Are you looking in Nicaragua, in other regions? Are you staking more ground in Nicaragua? Can you talk a little bit about expansion beyond the current concessions that you hold?
Sure. So I can tell you it will be a lot more difficult, and once we get there, it would have been a lot more difficult to get from 0 to 500 tons per day than 500 to 1,000 tons a day. So really, a lot of the teething issues that we're having on that finally, I think, imminently getting over, getting to 500 tons per day nameplate, are not going to be there when we actually expand. So it's from 500 to 1,000. Most of the stuff is there, and actually very, very minor amounts of capital needs to be put into that plant to expand to 1,000, and we're fully permitted to do that. So to the extent that we can actually have things in Nicaragua that can either supplement our mine and have this run pretty consistently, continuously at 1,000 tons a day, maybe something in the area that will allow us maybe even more time to get Las Conchitas up and running. All those things are useful. So anything by the mine in the area, I think at this point, that concession that you see to the right of De Oro in the Corona de Oro gold belt, we actually have under application for a concession enhancement. Everything else is basically owned by the government. So if the government wants to do a deal with us, we would love to expand our property beyond that. If there are small scale operations in Nicaragua that we think can wind up helping us get to 1,000 tons a day. We'll take a look at that. So those are the easy types of M&A that was frankly always on the table, even when we were going in to our project build out. So the things that we utilize are our infrastructure, physical and human, to go and be able to supplement what we have. Then there's the external stuff, right? So larger scale M&A and even multi jurisdiction M&A. There, this company had zero capacity to take a look at anything on either side, buy or sell, until the mine was up and running. It was basically one crisis after the other until the mine was stabilized in June. I should say the plant was stabilized in June. Really, since June, great. Let's take a look and see what's out there. The short answer is not much, right? So I would say, going back to that point about looking at stuff on the screen, there's very few things that make sense. Not zero though. So the things that do make sense, we try to see if there's something to do. Most of the time, we run into the same level of hesitation. I would say what we bring to the table is that we have really this very unique deposit where I think it can actually grow into something special over time. So you have the ability to have like oodles and oodles of organic growth. We have truly an unparalleled like mine building team in terms of building small and medium scale mines in these jurisdictions. So to the extent that there's assets out there that can leverage off of our people's skill sets, then great. And the stuff that we don't have, but we don't have a very large delineated resource, and we never will, right? Just because of the nature of the ore body, it's going to be very, very difficult to prove out a very large resource. And we were discussing earlier is that sometimes kind of making yourself available to some of these heuristics that investors need to look at is a good thing, a useful thing. You can't really just always yell at the world. It's like, you can't look at XYZ because I'm ABC instead. No. Like at the end of the day, we have to kind of position the company to make it attractive to the broader investment community. And to the extent that we have deficiencies, I think M&A is a great way of supplementing some of those, or at least fixing some of those deficiencies and supplementing what we have. And to the extent that we can help somebody else's assets and they can help us, great. Like, so I have no issues. Unfortunately, though, the pickings are slim.
I think that's a challenge that a lot of companies are having. I had one follow-on question, which you alluded to looking at some of the small-scale operators in the area as potential targets of acquisition. I know there's artisanals and super artisanals in the region as well. Have you considered toll milling at all? Is that a possibility? Is that something that you could see yourself doing to fill some of the excess capacity? If
not as a business, right? So definitely not as a business, as a way of making money. As part of the mining code, we are required to give 1% of our prospective concessions to small scale miners. It's kind of amorphous or murky on how to actually achieve that. So it's kind of like a constant dialogue between us and the small scale miners and the government. So everybody kind of looks to us on the leadership side, and actually the small scale miners on our side, especially the folks to the north, have been fantastic. I think there was a lot of press releases that we put out over the course of last year that we would not have been able to put out if it wasn't for the fact that the small scale miners were exposing some of these veins. To the extent, I would say one of the pluses and minuses of having an ore body that looks like this, where you actually have relatively shallow dipping structures, is that obviously for us to do an open pit operation, it's great. For small scale underground mining without sophisticated kind of ground support, kind of limits how much you can take out before it becomes too much of a pain in the neck to do it. So generally speaking, when we see small scale miners on site for veins that look like what we have like over at San Albino, it really is limited to just a few meters from surface, like maybe 5 or 10. So it's a tiny bit. So for us to work out a deal with small scale miners, it's like, okay, it's your business. It's part of the government's code to do this, and for us to try to help you do it safely, so to try to avoid using mercury and things that are just not good for the environment, and to the extent that we can be helpful in that regard, great. And if it means being helpful in that regard by processing some of your gold over at our mill, great. And then to the extent that you get deep enough where it's no longer commercially viable for you to operate as a small scale miner, we would love to take over the surface rights and then actually explore this in kind of a more holistic basis. So there are deals like that we're considering that will allow the small scale miners to maintain their lifestyle, their vocation, and for us, at the end of the day, like the first 5 meters from surface is not really going to be moving the needle for us as an operation. So to the extent that there's like a win-win like that, where we can incentivize people to avoid using some damaging chemicals and elements, then we can start taking a look at being a processing outlet. But it's not like we're going to be running this as a toll processing center, because we think it's a profit opportunity.
Got it. That's an interesting angle around the environmental concerns, because there's a lot of farming in the area, a lot of, I think, even organic farming, things like that. So it's nice to see that you're taking into consideration the environment. We don't talk a lot about ESG, but I know that you do have a number of programs in place. I think we're over the hour, but maybe that's a good place to end. Why don't you talk about a couple of your programs and then a catalyst and wrap it up?
Sure. I mean, the catalysts have always been the 3 big things that we're doing. So we got the mine up and running. We've been profitable since the end of May. People are going to be surprised at just how much the balance sheet will have changed in Q3. And as I said, Q3 was not a particularly great quarter for milling operations. Q4 is quite different. So the mills are getting up to nameplate. We're in the best part of the deposit, so porcelaina. So grades, if anything, are picking up. Everything is kind of running at steady state. We'll likely have a material increase in our gold production for Q4 over Q3 without a material increase in the mine site dollar costs. So the profitability of Q3 was a lot. The profitability of Q4 will be a lot more. And then ideally we'll get those 2 other rigs at site sometime in early November, in which case we can actually start really going through the meat of the infill work over at Conchitas, so that we can maintain our target of getting that as a resource, along with the updates over at San Albino by the first half of next year. But when we get those permits over at Puerto Rios and Segoviana, that's going to be the real game changer over here. I'm convinced that we have discoveries there. There hasn't been a drill hole put in anywhere on the property outside of San Albino and Las Conchitas, like 0 on the drilling side. But we can already see discoveries just in terms of what the veins, how they're exposed, how they're lying, what the morphology is, like grades. We were able to take samples and process it at our own lab, as well as our external labs for public review. I don't think there's any question that there's going to be a very, very large amount of high-grade deposits that look very, very similar to San Albino elsewhere on our property.
Right. I had one question, which is, when you say a meaningful increase in production in Q4, are you talking 5 figures from 8?
Yeah, well, we'll be over 10,000 ounces produced for the quarter.
Okay, great. I don't have any more questions. Akiba, is there anything you wanted to talk about today that we didn't cover?
No, that's about it. I guess the other big catalyst is that announced the buyback. So
Yeah, of course.
And I guess the big thing with that is that we are, and I've gotten a lot of criticism, and I don't understand where some of the criticism is coming. I can understand some of the criticism that we were like diverting capital from exploration to capital returns. Like obviously everything that we have over here needs to be funded, just because the return profile of the targets that we have are fantastic. But it's like, I think investors sometimes lose the plot a bit, right? So everybody kind of wants the reason why they make an investment in a company to be proven out in the stock market, right? So it's like, I'm invested in this company because I really like this particular exploration target. And I think if they're going to hit that hole in this direction, it's going to have this kind of grade and thickness over there, and the stock's going to go up, and I'm going to look like a genius, right? And then when that doesn't happen, they, instead of actually kind of admitting that there was something wrong with the underlying thesis, then these stories kind of get invented as to why that's the case. When you're dealing with illiquid stocks, generally speaking, the reason why stocks go up and down are just because there's more buyers and sellers and more sellers and buyers. And sometimes it's not more difficult to explain than that. There's an underlying business over here. And then over time, the stock market is going to be something that will actually be the ultimate determinant about where value is. But in the short run, you're going to have these flow of funds that will determine where the stock is going to go. It has nothing to do with what's actually happening over at the company. The last time that we raised equity was in June of last year. So we raised it at 40 cents a share. If somebody told me back then that I'm going to raise this capital over at 40 cents, and then and we raised $12 million through Wexford and $8 million through the broader market through a very well executed deal by Stifel GMP. But if Stifel GMP said, look, I can get you $8 million into the spot deal, but $1 million is going to come from investors who, irrespective of what you do on the ground, is just going to sell that stock over the course of the next year and a half. Do you know what we would have done as a company? We would have raised $7 million and then just say, you know what, let's leave that other $1 million off to the side and we'll figure out what to do. We'll take on an extra $1 million of debt and not deal with it. Which, by the way, is the functional equivalent of us buying back that extra $1 million of stock that has been kind of leaking out in the market over the last year and a half. It has nothing to do with what's going on over at Mako. So it is my preference to go and repay as much of that debt as possible, as quickly as possible. Ideally, I publicly stated this, that debt will be gone by late the second quarter of next year, so well before its maturity date. So the fact that I extended it by 6 months should not be a signal in terms of when we actually anticipate paying it back. But if the stock trades at levels that it was trading at a couple of weeks ago, you better be sure we will mop up whatever liquidity is, because we have the capacity to do it at this point.
I guess we could wrap it up there. We could keep going forever. I always have more questions, but I want to be mindful of people's time. If anyone has any additional questions, feel free to reach out. I would encourage everyone to follow Akiba on Twitter because he puts a lot of information out there. So I think that's the best place to stay up to date on Mako. And yeah, looking forward to some of those catalysts. Can't wait till you start drilling on some of the pure exploration stuff. I think that's going to be really exciting.
Yeah, no question.
Cool. We'll leave it there. Thanks everyone for participating. Thanks for your time, Akiba. Appreciate it.